The number one fear that people have about Bitcoin is that it is too risky, it is too volatile. Let me break that down. Bitcoin is risky if you don't understand what it is. If you don't understand the history of money, the different things that we've used as money, how it has evolved, what properties make good money, then it will seem as if Bitcoin is risky. But once you understand that, and I made a video about this, it will start making a lot more sense to you. Second, you got to understand the technology behind Bitcoin, and I will make a video around that too. So that's coming to the risk of it. But what people ignore when they talk about the risk is the reward. Whenever you make an investment, you have a trade off between how much risk you're taking and what is the potential reward you can get. If you look at a fixed deposit in, let's say, a very safe bank like the State Bank of India, the risk is quite low. It is essentially zero, but the reward is quite low as well. You're not even beating the inflation that you experience, and that is not CPI inflation. CPI inflation is close to 6% this century, but the inflation that you experience as the consuming class of India is at least 10%, and I made a video about that as well. So your fixed deposit is not even beating your inflation that you experience. So the return is too low. If you look at Nifty 50, well, it's giving roughly 13% every year this century. So you're saying, oh no, that beats my 10% rough inflation figure, right? Sure, it beats it by 3%. And even if you put an SIP into Nifty 50 for 30 years, the return you're going to get is 60%. For 30 years, 360 months, you get 60% return on top of that. I made a video about that as well. So the Nifty 50 is not good enough. It's not going to make you rich. It's going to keep you where you are. So if you want good returns, you'll have to go a little further out the risk curve. But I do not advocate trying to pick stocks. I do not advocate FNO trading. I do not advocate meme coin hunting, because these are guaranteed ways of losing money. Most, like the overwhelming majority of people who put money into this lose money. Even the founders of Zero have put out a tweet saying this, and still people do that because they're addicted to this. They are used to the gamble. They've convinced themselves that they will be different somehow, but that's not how it works. See, I'm not a financial advisor. I'm just a guy who's done the math, who's done the homework, and I'm just telling you what I've learned. So you need an asset that is maybe slightly more risky than an FD or a Nifty 50 investment, but gives you disproportionately higher returns, and that is Bitcoin. For slightly more risk, and that risk is also dependent on your perception of it, on your understanding of the asset, you get disproportionately higher returns. How high? Let me tell you. For the last 5 years, gold has done incredibly well. It has done better than Nifty 50. It has done better than the S&P 500. It has given you 20% growth annually on a compounded basis, 20% CAGR. Bitcoin has given you 60% CAGR. So if 5 years ago you put your money into gold, it would be 2.5 times today. But if 5 years ago you put your money into Bitcoin, it would be 10x today. So that's how much Bitcoin is beating gold, and on just a 5 year time frame. Give it longer, the returns will compound just as highly, just more quickly. So the risk reward curve, the risk reward equation of Bitcoin is better than any other asset out there. That's about risk and reward. Let's talk about volatility. Sure, Bitcoin is more volatile. It is roughly twice the volatility of gold. But as I told you, 2.5x over 5 years versus 10x over 5 years, and only twice the volatility. So the return you're getting justifies the additional risk, additional volatility that you have to stomach. And Bitcoin is just 16 years old. Gold is thousands of years old. So a 16-year-old asset is halfway as good on volatility compared to a thousands of year old asset. So as time goes along, Bitcoin should get less volatile, Bitcoin should stabilize a little more, which could also mean that your return profile will be more subdued than in the past. This is what most people expect. I have reasons to believe that this is not necessarily the case. It might be the case, it might be that Bitcoin will return not 60%, but maybe 40 or 50% for the next 5 years. But it is also possible with increasing adoption, because right now adoption is very low on Bitcoin. Very few people, very few institutions hold Bitcoin. And as adoption takes off, we haven't yet seen the hockey stick of Bitcoin adoption. As adoption takes off, it is possible that the future might even give higher returns. Of course, none of this is guaranteed, and this is not financial advice, but I'm just talking about the different possibilities out there. It could be lower, it could be higher. So if you look at risk, if you look at volatility, and if you look at the bigger picture of things, Bitcoin is the better asset. If you want to learn more about this, if you want to learn about money, about investing, about gold, about Bitcoin, subscribe.